Good afternoon and happy Friday. Welcome to Stock Market Today by Investors Business Daily. It's Friday, October 9th, and I'm Justin Nielsen, joined by Ed Carson today. And we had a really strong market that we want to take a look at today, but we'll also be getting into some stocks, Datadog, Veeva, and JD, probably a couple others will kind of sneak in there. But as we do every Friday, we're going to take a little bit of a deeper dive into the market today. So let's go ahead and start with where the index is finished. We had the S&P 500 up 0.9%. We had the Nasdaq Composite up 1.4%, and the Dow Jones Industrial Average that was up a little bit, about 0.6%. So the index that gave us our follow through day was kind of the worse off today. And we were noting earlier in the paper and online how the S&P, not the S&P 500, the S&P 600 and the Russell 2000, the small cap indexes were kind of showing some strength, but those had kind of backed away and were not nearly as strong. It was really, today was all about the Nasdaq, if you think about it.
Yeah, it really was. This was this was a great day for just all around, because for much of this week, you can sort of see in this area here, we sort of were hitting around these areas, hitting sort of the highs. Depends on the index you look at. The major indexes were doing fine, but it was the leading stocks that were pouring on. There was lots of leaders that were hitting new highs, forming, offering early entries just across the board, whereas the major indexes not so much. But in the last couple of days, we really just cleared, sort of decisively cleared this whole short-term area well above the 50-day line, well above short-term highs, starting to move towards the old-time highs now.
Yeah, and I think it's really demonstrated if you look at the Nasdaq 100. If you just look at QQQ, which is an ETF that does track the Nasdaq 100, those are the top 100 non-financial names in the Nasdaq. You can kind of see it a little bit clearer there, that there was this area that was kind of providing resistance, and now the Qs have kind of lifted above that area. And for the Nasdaq Composite, this puts us just one day off the top where we were September 3rd. It kind of puts us in that trading range that we were at. And while the leading stocks were kind of that first indicator, now you've got a lot of those bigger names that are participating, and the indexes are looking much stronger, as you pointed out, Ed.
And I just want to look at this is like we're looking at this regression line, which we've now anchored to from April 6th, the follow through day on the Nasdaq back here, to September 30th, which is the follow through on the Dow. We're not sure if we're going to come back into this channel. We're sort of moving back into it. We don't know if this trend will work or not. So we're keeping it in there. It sort of worked like a channel line during this period, made it easier to without drawing. But we don't know if the market will resume this pace or not. Obviously, a lot going on in the coming weeks, and we'll have to see. But we're going to look at it for now in that regard. And you can also see, we're going to switch over to a weekly. You can just sort of see again. This was an up week, even though it closed sort of poorly because of Trump's coronavirus diagnosis, which seems like an age ago.
Right. Everything in 2020 seems an age ago.
It does. It does. We're all stuck in our homes, but somehow it's gone for years.
Right.
But there was these negative weeks, and now we're moving higher and basically closing it. We closed at essentially the session and weekly high. Just really dramatic change in the past few weeks.
And as you mentioned, look, over the next month, we have a lot that's going to be going on. We have earnings season. That's always rife with potential pitfalls just by itself. But now we're talking about how do you adjust your models for the shutdown that occurred and kind of the reopening and the uncertainty that kind of goes around that. So again, this is where sometimes you're handling different stocks very differently based on how that shutdown affected them. Not only that, but I believe in a month we've got some other things that are going on the political scene, right? We've got this election, and all that entails with that. A lot of times there can be a big difference between what stocks are favored depending on what party wins. Now, sometimes that can be a very violent change in the short term, especially when there's a surprise. But a lot of that kind of gets figured out over the course of the administration's term. But there's always those changes that can occur kind of on the short term, and so those are definitely things to be aware of in the coming month.
Yeah, I mean, just next week we have Taiwan Semiconductor, ASML, Intuitive Surgical, a few good transportation companies, a lot of banks are coming out, some airlines. So that's earnings season, plus Amazon Prime Day, plus the Apple iPhone event. So even though earnings season is just getting started, there's a lot of stuff going on. I'm going to move over to the S&P 500 here.
Mhm.
Just want to show how this goes. Actually, I did not share. Let me try that again. Um,
Or if you, yeah, I'm still seeing the composite, but if you put SPX, oh, or
yeah,
you want to go to
let me go.
MarketSmith?
Let me do
Yeah,
this.
yeah, let's do MarketSmith.
Yeah, and
So zero
what I'm doing
S&P
here is that
5.
this is actually set to Tuesday, and I just trying to show the example of how it didn't look so great. Now this is the S&P 500, but basically the Qs and the Nasdaq to some extent, they all sort of look like this. They're all sort of hovering around the 50-day line, just above or below. So it wasn't like this decisive action. So
Yeah, I mean, it looked like there was an area of resistance that was potentially going to be a problem. And
yeah,
so it really wasn't until the last few days that I think, a decisive move above that area has really kind of, we were already kind of looking for reasons to getting in because of the way the leading stocks were acting. But now we've got extra confirmation with the indexes, maybe a little bit more breadth now that some of those big cap names have gotten added to the mix. And while we're at it, we might as well just take a look at the Dow Jones Industrials. We don't usually spend too much time on this index, but since this is the one that gave us the follow through day, and Ed, I think your point, that we were talking about before the show, it just kind of goes to show that when you see those leading indexes move, you're kind of looking for a reason to get back in. You're kind of looking for that follow through day signal, and we're very lenient on, we'll take it from any index. We're
yeah.
looking for a reason to get in. And I liked your analogy. It's not like we're looking for two-factor authentication, or something high security. It's
Yeah, technically we are, because we are looking for price and volume, but it's a really low, authentication kind of thing.
yeah,
And it's just on one index one day. So you have this whole series of days where you can do it on any one of them. So we've got it. The leading stocks, if the leading stocks hadn't been acting so well, I think we would have been more nervous, up
absolutely.
until the last couple of days, because it's like, well, we're not really going anywhere, since the follow through, but but now we clearly are. So it's very positive on the indexes and the leading stocks. And I think maybe we can take a look at some leading stocks now
Yeah, let's
that
do that.
actually work.
Why don't we go ahead and start with Veeva? This is one that, this shouldn't be new to people's radar, because this is one of the ones that had a very strong move during this whole coronavirus rally. So this has really been moving since the bottom in March, and it came back to the 50-day moving average line. Let's go ahead and step back and take a look at the weekly.
Yeah.
Um, just to kind of start our lookout. I mean, you can just see that it had a few touches. The biggest problem with Veeva Systems was that it really didn't give you much of a chance to get in. If you missed it at the beginning, it really didn't give you many opportunities to get into it. Now we finally have, because of this September correction that we saw, we finally have an opportunity. And if you go back to the daily, I think your marks are excellent. This actually kind of gave you some early potential entries ahead of this traditional buy point at 298.86, 10 cents above that previous high.
I think with this rally, especially since it was so choppy at first and we weren't quite sure how it's going, the indexes were hitting support. Doing early entries was probably a good. You could have probably bought it as it was coming off the 10-week line. Could have tried it here and then would have had a little scary time here. But
Mm-hmm.
it found support here, and then these are a couple spots where maybe you could have, also added to shares. And because now if we break out, you might be able to fill out a position
Mm-hmm.
in that regard. And that's just one way, because we weren't sure, a little tentative. You sort of like let the rally draw you in, and you can do
Absolutely.
that with across your portfolio, but also in individual stocks, because this would have been at this point, even now that it's 8% above the 50-day line, that's getting up there. So if it breaks out, you'd almost be ready for a pullback. Not that, so I just like those early entries as a way to just sort of tiptoe into it, and sort of gradually get into the hot water, as it were, without just jumping in.
Right, right. And another benefit is you kind of start out small in those cases. And so if it still gets choppy, if the volatility is still there, if the rally fails, then you're not you're not getting hurt as much because you haven't put as much money out there. Again, exactly as you said, if you let the market kind of pull you in, then you're putting more money at risk as you're making progress on the money that you've already put in. So once you start playing with the house's money, it's a whole different psychological feel to it. Just on the fundamental side on this one, it's worth mentioning, as you can see on the MarketSmith chart, this has very solid fundamentals on both the earnings growth and the revenue growth. So really no big change based on the shutdown, for this particular stock. And of course, one of the things that they're very heavily involved with is the life sciences companies. They're providing the software to kind of manage a lot of those, those issues that the life science companies, the biotechs and all of those are dealing with. Let's go ahead and move on over
I just wanted
to,
one more thing, was
oh yeah.
just the technical line, the relative
Mhm.
strength line, never really fell that much in September. It's been hitting a new high. A lot of leading stocks are doing that, especially with a lot of the big caps sort of slow down. It's just the blue dots means that it's at a new high, the relative strength line, while it's still in a base or breaking out that day. It's just a powerful sign right there.
Yeah, especially when you see that happen, before the price gets to new highs. And again, it makes sense. This one did not really challenge its 50-day moving average line that much, whereas the indexes did fall below their 50-day moving average lines. This really was getting support all along the way there. And so, when you don't correct as much, that means your relative strength line is going to look a lot stronger. So moving over to another software name, this is Datadog. And here's another one that did give an early entry, kind of at that, well, not an early entry, a traditional entry really at 99.09, but that might have been a little bit of a tougher buy, because again, this was very early on. It was up so much. That was the follow through day, however. So if you were looking for stocks on the follow through day, like we usually do, this is one that would probably have gotten on your radar. Now that we've gone up a little bit, it's kind of formed this little shelf. So today could have been a place to add on, or for swing trader, we actually entered a position on this as it just kind of broke the little downtrend over the last few days.
I mean, sometimes this is safer because you want to see how it works out. Obviously, it helps that the market continued to trend higher. I mean, you can imagine that if we hadn't had this strong day, a lot of it on the stimulus buzz, which may or may not happen, this stock might have drifted down this way. And so that's one reason why you wait. But this is like, sometimes you wait and sometimes it's better to pay a higher price. And you think, well, why would you pay a higher price? Because there's a risk that this was not going to be, that this high price would quickly retreat, into some kind of thing more serious where you have to be, where you might get shaken out. So, or
And
you,
I mean, there's also the fact that it was up 12% that day. So
yeah.
let's say you retraced, how much would you have been able to sit with
Mm-hmm.
it if it retraced, let's say 50%, which is very normal for a stock to do. So, you kind of have to know, when you're dealing with some of the high flying names, there could be some extra volatility. And when you have a 12% move in a single day, you have to expect some retracement. Now we didn't get much of it in this case, but you have to be willing to accept that going forward.
The volume was tremendous on the original breakout. And again, very strong today. Looks like it's, may not have the final numbers, but it's double average volume. These are very powerful days. Does show a lot of institutional buying probably into this stock, which is always great.
And on the fundamental side, this is something that has recently kind of turned around into profitability, after some negative growth for a while. But the revenue growth has remained fairly stellar over like the last 9 quarters or so. Very strong in terms of the revenue growth. And let's go ahead and wrap this up with JD.com. And for a while there, the China stocks were giving us a little bit of consternation. The whole idea of, not only was there kind of the fraud, stuff that was happening with some of the names. Luckin Coffee was the big one there, but then there was this whole idea that, were they going to be pulled from the U.S. exchanges? Kind of made us a little nervous about investing in China names. But JD.com and Alibaba are two names that have been looking very strong lately.
Yeah, and I really like it. Both of those are doing well. Alibaba has broken out from a traditional base, sort of taking the lead in this rally, but near the end of last rally, the JD was the one that had the big
Yeah.
gain. I mean, whereas, and it also only came down to here. It came down just above its 50-day and 10-week line, didn't come back all the way to the old buy points like here or here, the way Alibaba did, but both are doing well. This is sort of a short area. You could have probably bought it or added some shares when it rebounded from the 10-week line, like either here or maybe as it breaks out here. This is another early entry area. This is sort of this little mini area where you could add a little bit, not saying going full hog, just jumping right in on that spot, but it's a way it's going to be there. Probably it'll have a base after this week. In a couple of hours, it'll show up maybe on a weekly chart. That would provide another buy point traditionally around here. Just a lot of nice things about that. And one thing is that if the stimulus bill happens or doesn't happen, yes, I mean, presumably JD will be affected because it's being bought by US investors, but JD's business is reliant on the Chinese economy and going back and forth. So it doesn't really need a stimulus bill from US Congress to have a good business here. And it's nice to diversify your holdings a little bit. Just really strong growth. I mean, look at, it had a little bit of a setback during China's coronavirus crisis, but you can see really tremendous growth here in both sides here. Just a really strong action. This is a leaderboard stock, and so is Alibaba, and there's good reasons why.
Now, a very good point that you made earlier is, that strong move that we saw in August. The fact that it was able to hold on to a lot of those gains. Again, the relative strength line was, hardly coming in at all. This got support, barely came down to the 50-day moving average line. So again, a lot of times when you do have the correction like we saw in September, these are the stocks that should really get your attention. The ones that hold up the best are often going to be the ones that become your leaders in the next round, next rally. So that's kind of the look that you should be going for. And it happens over and over again. A lot of people say, well, isn't everything different now? There's certain things that are just psychologically the same and haven't really changed that much in the stock market since, Jesse Livermore was doing it at the turn of the century of the 20th century. So just kind of really kind of get these looks of these stocks set in your brain, because that's going to really help you identify the leaders of the future.
So what's one thing is, what do you think is the expectation going forward? I mean, obviously there's a lot of headlines that could upend your expectations right away.
For the general market?
For general market, yeah.
Yeah, I mean, that's the thing is I try to temper my expectations, because no matter what I think, it really comes down to what the market does. So that's why we really try and analyze the daily action of the market and kind of let the market tell us what to do. Because I'll tell you, there have been so many times where I've been, so fearful in this market. I'm just like, there's no way it could keep on going. But I stayed in because the market was telling me, hey, the stuff is working. My stocks are working. At the same time, there's sometimes where you're like, so scared because you don't want to get back in. And, that was happening for a while here, as, it kind of looked like there were a number of these false starts. There were all of these overhangs between the stimulus bill, Trump getting diagnosed with COVID, that there were and the election itself. But here again, you have to kind of listen to what the market's telling you. Now, I'm fine, kind of lowering my exposure ahead of the election, just kind of knowing that there's a lot of volatility that can happen around that time. And if it goes one way, am I going to miss out on gains? Sure. If it goes the other way, will I be happy that I'm maybe not as fully invested? Probably. And it's more for me kind of protecting the gains that I have this year than necessarily trying to compound into, even more tremendous gains. So where do you kind of stand on things?
Well, I mean, for one, just in general, I mean, I think that now that we've cleared this resistance, obviously the market's been saying the last few days, it's probably to increase the exposure somewhat, wherever you were a little bit. Obviously, at some point, if you're super exposed, then maybe, maybe you don't need to go any further, but definitely a lot of opportunities. It feels like it's sort of like breaking through that area of resistance. And so it isn't having to push through kind of things like get through the tape as much. That doesn't mean it'll keep on going and get paused here, but it feels like that struggle that was going on for a few weeks, it seems to have gotten past that. So drawing you in a little bit, I think you make a great case about the election. And look, if the market does very well after the election, whether or not that next day or the next few months, there will be plenty of opportunities.
Yeah.
I mean, we don't know. And if the market goes down, it might go down, it could go down for a while, whatever it is. So reducing the exposure, I mean, you don't have to try to grab every single dollar. I mean, if you're thinking I have to make every dollar at every moment, you are going to end up with $1, and because you will be constantly fighting the short, the short odds kind of things. It's like I'm going to bet for it, even though the risks are low. Like anybody who was really trying to buy in here, except for a handful of stocks, that didn't work out so well. Like it's just better to do it in an uptrend. There's a lot of headline risk. I think it seems favorable right now, but you just have to take it one day at a time because boy, the market can change pretty quickly.
Yeah, and that's the way I'm looking at it. At least in the short term, next couple weeks, I'm going to be trying to get as much as I can out of it. But then as we get near to the election, I might scale back a little bit and start taking profits, and then wait for the next batch. Because again, there's always another batch of leadership around the quarter, and in my experience, it doesn't necessarily matter what political party is in charge. The market can do well, in the right environment, and that's kind of it can be very agnostic in that way. So I think that'll do it for us today. Thank you so much for joining us. And if you want to continue the conversation, you can join us every morning on IBD Live. Ed and I are both panelists, and today we had one of our portfolio managers of O'Neill Capital Management, Charles Harris, join us. So we've got a lot of great people with a lot of trading experience, kind of walking you through that first hour of every morning with ideas, our market analysis, and a little bit of just how to handle some of the volatility, and how to handle your portfolio in these times. So if you haven't already, please do check out a trial at www.investors.com/IBD Live. We'd love to have you join us there. But if not on Monday morning, we will see you right back here Monday afternoon on Stock Market Today by Investors Business Daily. Thanks for watching.